Hey everyone, it's Imran from Options Insight. This is a quick message to let you know we've got our options trading bootcamp happening this weekend, 29th and 30th of April. If you're worried about the potential recession, this is the time you want to learn how to weatherproof your portfolio. Okay, who knows where the bottom is in this thing? 3,800 on the S&P, 3,200 on the S&P. There's multiple targets out there. In this bootcamp, I teach you how to hedge your portfolio. I teach you multiple techniques, whether it's long vol, short skew. These are things you need to know how to navigate market swings. So come and check us out at our website, optionsinsight.com. This is an opportunity you don't want to miss. I'm back. And on this Thursday, I have got a very special trade idea for you. Something I don't talk about very often is a single stock earnings trade. So stay and watch till the end of the video to hear what I'm talking about. Okay, so going to our macro cross-asset dashboard, what do we see? Kind of a repeat of the previous day's price action. We did see broad market weakness. We saw the S&P continuing to sell off, not with any great velocity, but getting down to 40.55 there. But then overnight, we've had the mega cap techs come to the rescue again. This time we had Meta beating earnings, and they're up 12% post the close yesterday. So that's taken the Nasdaq back up again and taking the S&P futures with it. We'll see if it gets faded. The broad market did get faded yesterday, whereas Microsoft held on to its gains. We'll see if we see something similar today when the markets come in. Looking at commodities, they did remain soft. We saw energy probably worst hit with oil and nat gas down 3% apiece. But even precious metals were sliding down about 0.5% to 1%. Looking over at vol, pretty mixed. We saw kind of drifting slightly, Nasdaq, China, but European vols having a bit of a catch up 1 vol point as they weren't exploding quite as much the previous day like the S&P was. And then inside commodities vol, we're seeing generally firmer, especially likes of oil up 3.5, uranium up 1.5, but nat gas just is bidless, is now down to 63. And it's carrying about neutral right now. But, right now, nat gas vol is about as low as I can remember it for quite some time. Okay, carry-wise, very positive carry in equities. Generally pretty positive carry there in commodities as realized vol continues to slide. And then skew holding really well, actually. We had said we are starting to see a put bid come back. And that's now filtering through to, say, the Russell now. Obviously, with what's going on with the regional banks, people getting concerned on the Russell. So that's up at the highs there, back to 7 local highs. We're in about the 70th percentile for S&P skew, which is pretty damn rich. So there's definitely some put premium being built back into the market there. And in terms of commodity skew, we are seeing a bid come back for precious metals, still in call territory, but a lot less than it was. Only 1 vol call premium in gold and silver. We're seeing a bid for oil, put skew, and then slightly drifting lower in nat gas and uranium there. Okay, what else are we looking at? So much hype in AI. So that you basically look at any news anywhere is talking about AI. Okay, so over the last few months, the craze of ChatGPT and other LLMs, which are large language models, has taken the world by storm, and this AI revolution seems to be in full swing. The pace of the innovation within AI is staggering. Just how fast this thing progresses. ChatGPT 3 was only a few months back. Now we've got 4. Who knows when we're going to get 5, but it's just moving so fast. These AIs can write their own code, right? So it augments the ability to develop when you've got an AI that can write code for you, and it really speeds up that process. And that's what we're seeing in action, okay? But it does seem with all the hype, investors are crowding into any stocks that look and feel like AI. So the big stocks in the space are the likes of Microsoft, Google, Amazon, Meta, and Nvidia. And these have outperformed massively. We look at the red line here. That's basically that basket of names relative to, say, the other largest 5 stocks like Apple, Tesla, Berkshire, etc. It's knocking it out of the park, right? It's outperformed by 30% since the start of this year. So it just goes to show you how crowded this thing is getting. Another interesting anecdote on the whole AI thing is this magazine covers that Brent Donnelly talks about. If you don't know what I'm talking about, watch the podcast that I did with him called The Art of Trading. He's a super smart guy with decades of experience, so really worth a watch. But basically what we're saying is when you see magazine covers talking about the same thing, wherever you look, right? It's AI revolution everywhere. Okay. It's telling you that this is becoming very, very consensus, very crowded, very mainstream. Okay. So the idea being that even if you're a believer in this technology and you know it's going to change the world, as I do, right? I mean, the productivity boost that you can get from this is obscene, right? And it's going to displace a lot of knowledge workers and etc. and really change the way that we work. But everyone's piled into it as well. So the market has a habit of seeking out where the pain trades are. And I think the crowded positioning on this one is becoming probably quite dangerous. So I wouldn't be surprised at some point there's going to be a pothole where some of these type of companies are going to disappoint markets' expectations, and there's going to be a bit of an exit. Okay, and like I said, it doesn't mean over the long term that the people who are in this space are not going to be massive winners, but you just need to understand when sentiment gets too far stretched one way. And I think it's clear to say that every man and their dog is bullish AI right now. Okay. So do what you want with that information. But NVIDIA earnings are at the end of May. So you might want to look at where that stock is going into those earnings. Okay. Amazon. So another one of those names who's in that space. Is Amazon going to deliver on earnings? So far, the mega caps are doing pretty damn well. Obviously, Microsoft was up 7. Google, Meta's up 12. Google was pretty flat on the day. But if we look at these mega caps, advertising revenue does seem to have turned a corner, right? Which is not what you'd expect if there's a recession coming necessarily. So it looks like businesses who have ad spend are in better shape than maybe we might have thought. Okay. Something we also noticed in Google and Microsoft results is that they're making stride in the cloud services business, right? So you've got Microsoft Azure beating expectations, projecting now 30% growth in Q4 roughly. Google's also turned a profit for the first time in the cloud space. They've only been in it for a few years and they're gaining market share. Okay. So we're not so sure that this news is such great news for Amazon because they were the first one in the cloud space. And now you've got these other big boys gaining on them, okay, and picking up market share. So who's that going to be at the expense of? So I wouldn't be surprised, and this is a chart from back in February, right, where we're seeing clear trend higher in Microsoft, we're seeing a trend higher in Google, and we're seeing a trend lower in Amazon. I wouldn't be surprised if this is continuing in that direction, and we actually get a miss on the cloud side for Amazon, right? Maybe it's already priced into the numbers. I haven't crunched the numbers to see what the analysts are expecting in terms of drop in market share. But to some extent, if you don't think the whole pie is getting that much bigger, which I'm not 100% convinced it is, then I think that they might have lost some market share. So there is risk to Amazon on that. So those figures, they're coming out tonight after the close. So I wouldn't be overly surprised if we get a negative on the cloud stuff for Amazon. Okay. Now the market's not agreeing with me. The market has taken Amazon stock 3% higher on the back of what we just saw with Meta. So take what you will out of that. The implied move for earnings is around 7%. I struggle to see this thing having too much room on the upside. If we look at the chart, 200-day moving average has kind of contained this thing for quite some time. We're sitting on it right now. And then we've got this 110 resistance as well. Looking at the volatility side of things in Amazon, and it's not part of my regular vol dashboard, but as and when I can have a look at what's going on in vol markets and on the fly in certain single stocks. And this is the type of stuff you can learn from me in my upcoming bootcamp. But basically, you look at realized vol across all the metrics, it's sitting at around 30, 35. And implied vol for this Friday, and it's not really implied vol, it's just what is the break-even move for earnings, and it's implying about 7%. Okay, so it's way above any type of realized we've seen. Now, clearly, we're going to get a gap. Typically, it's around 6 to 7%, the gap that you get on average on Amazon earnings. And out of the last 10 earnings, they've kind of the stock's rallied over 10% on 2 of them, and it's sold off the other 8 times. So you do get big swings, and that's being reflected in the term structure. You see this 120 vol in the front, which is basically Friday's expiry. So it's way, way inflated. So you don't really feel like you want to buy that vol there, given that it's pricing in a 7% gap either way. Looking at the positioning from our good friends over at SpotGamma, this is their equity hub that allows you to get a flavor of where the positioning sits on these names. And they have various sort of algos and metrics that they spit out to tell you where the concentrations are. So they've got Cornwall sitting at 110. That call wall used to be at 105. It's kind of ridden up to 110. It's basically saying that they see a bit of resistance at 110 based on option positioning. Okay. And we are at 107 right now, indicating we're at 107.5, something like that. So my thoughts are that we're going to struggle to break 110. We're going to, it's likely that it's going to miss, given what we're seeing from the market share gain in other places. I mean, if the whole pie is getting bigger, then sure they'll be. And if they announce some staggering thing on AI that they've been doing on the quiet, and they're going to announce something in AI, maybe the market latches onto that and loves that story, because we know everyone's mad for AI right now. So there are risks that it could rip higher. My base case is just that it's probably quite a good fade at these levels. How would I fade it safely? So, it's not often I trade one-day options, right? You know me, I'm generally much more in that sort of 2 to 6 week time frame, but I see an opportunity here on earnings. All right, that's it for today. Only one day left this week, and I'll hopefully see some of you guys at the weekend at our bootcamp. Take care.